Monday, February 26th, had a decent day today. One and done on ARM upside and called it a day. There were some decent opportunities on other names, but anytime I can make $700 off the open, I'm going to be playing defense and protect profits. I don't like to overtrade. I know that a lot of traders always think about the upside. Well, you could potentially make more and, leaving money on the table, but I always see the downside that if I take a trade quick off the open, especially like I did on ARM, and I'm on the right side of it, and I get a nice move on the contracts, I got a 20% move on the contracts. That's the trade. One good trade, book the profits, and then call it a day. That's why I do this. I notice that if I continue to trade more, yes, there's the potential for upside, but a lot of times I end up giving money back. So I'm a big fan of playing defense and making sure to protect that green. That's exactly what I did today, and it's a good start to the week. So now what I'm going to do is go over some of the technicals. But before we do that, you will see in the video that I was talking about ARM and I had my 140 calls preloaded before market open. But when I took the trade, I accidentally said coin because coin was on watch as well. There's a lot going on in my mind when I'm trading, and I was looking at numerous different stocks. So I said that I'm taking the 140 calls on coin. That was a mistake. It was ARM because that was the top of the list this morning, and I had the 140s preloaded. So just wanted to give a heads up so everybody doesn't get too confused when watching the video. It was ARM and I accidentally said coin. But now let's get into the technicals. Now, why was I watching ARM? Because it had the gap up, but more importantly, because look at this sideways consolidation on the daily chart after holding the 9 EMA, had a nice move to the upside in pre-market. So as far as technical levels, I was looking at this prior high on the red candle, 138.50. So it was trading well above prior day high. And then the next level of resistance was the prior high a few days ago at 138.50. So I was thinking that, hey, if we could clear that out or if we could hold that, then maybe there is a chance for upside. Also, it was trading right at it in pre-market. So just keeping it very simple, 138.50. Here's a little zone. Trading right around 138. In the pre-market, it had a push through it. So what was resistance hopefully could become support. So if ARM had a pullback into that 138.50 and it held, that was going to be an area of interest. And that's exactly what happened. Had a very quick pullback to 138.50, started to wick off it, and that was my sign to take a shot. Ended up taking the long, the 140 calls, got a nice move to the upside, and then took quick profits into the push. And just a reminder that I do have a Discord community. It's called the Alpha Academy. I trade live on voice every single day. If you're interested in joining, there's going to be a link in the description. But for now, enjoy the live trading. If the options have a big spread, then it's going to be an avoid. And it could mean that that first dip gets bought and it rips anyways. But I want to make sure the spreads on the options make sense. There's no reason to take unnecessary risk simply just because. So I'm looking at the 140s and I want to see how they open up and what the spread is. If they end up having like a 50-cent spread, then they need to calm down. All right, what, 20 seconds left. $138.50 on ARM. Key spot. Let's see how these 140s open up. Okay, so they got like a 30-cent spread on them right now. 40s. I'm going to try 5 140s on coin. Aggressive entry, but a little pullback. Held up. Just got a nice pop. I'd like to see this hold above 140. Come on, ARM. One little pop and I'll get out of this for a very quick trade off the open. I'm taking profits in that move. That was fast. I just got $1.44 on those contracts. Or ARM, yeah, ARM. I took the 140s on ARM into that dip. This could keep going, but I just got $1.44 on that pop. That was fast. You see the wick off 138.50, and the spreads were not terrible. And I only took 5 contracts because that was an aggressive trade off the open. ARM was very fast. Understandable to be kind of a tough trade to take that quick. But that's why I only took 5 contracts on it. And these things have gone another $1. But I just felt like took a trade in the first 30 seconds. I get $1.40 on the contracts. I'll just take profits. Wow, what a rip on ARM, huh? I wish I was more patient. My mind just doesn't allow me to hold stuff. Whenever I get a quick dollar on those contracts, I'm always thinking, take profits, take profits. I don't feel any pressure to have to take another trade. That's what I got 720 on it. 720 on ARM. Took it longer than the first 30 seconds. Got a pop, sold into the pop. So I'm now watching, but I don't feel the need to have to give any of that back. Very aggressive entry. It paid off. So now it's be disciplined and protect that. Because I got in fast. 30 seconds off the open. It's a very aggressive quick dip. And now I don't want to test my luck. Half the battle is just about keeping what you can get. And that was an aggressive trade and it paid off. So yeah, I mean, $700. Anytime I can make 500 plus, I'm going to be happy about it. And I do not want to mess a good thing up. $720 on a Monday. It's a pretty solid day.